Ladies and gentlemen, tonight we dive into one of the most debated questions in Iraq's financial world. Could 2025 finally be the year when the Iraqi dinar sees a revaluation? For years, speculators, economists, and everyday Iraqis have asked the same question. When will the dinar rise, and what would that mean for the country's future? Well, according to some experts, the answer may depend not on sudden miracles, but on a series of reforms that are quietly reshaping the nation's financial system. The idea of a revaluation, or RV as it's often called, has been surrounded by rumor and hype. Some see it as a once-in-a-lifetime opportunity that could restore Iraq's currency to the powerful levels it once held in the 1980s. Others dismiss it as unrealistic, pointing to the instability, corruption, and economic challenges that still weigh heavily on the nation. But what is different today, and why are experts suddenly more optimistic? The story begins with reforms. Over the last 2 years, Iraq's central bank, with heavy oversight from international partners like the U.S. Treasury and the International Monetary Fund, has been tightening the screws on its monetary system. The most visible step has been the reduction of dinar supply in circulation. By cutting down the sheer volume of currency floating in the market, the central bank is signaling that it wants to strengthen the value of each individual dinar. At the same time, Iraq has been expanding digital payment systems, encouraging banks, traders, and citizens to move away from cash and toward traceable, electronic transactions. Why? Because cash has long been the fuel of corruption, smuggling, and black market dealings. By limiting cash use, Iraq not only reduces financial crime but also brings itself closer to international banking standards, the very standards needed before any serious revaluation could even be considered. But reforms don't stop there. The central bank has been gradually closing the gap between the official exchange rate and the black market rate. This gap has historically been a source of instability, undermining trust in the dinar. By cracking down on illegal currency dealers and streamlining dollar auctions, the government hopes to restore credibility to its monetary policy. All of these steps, tighter money supply, digital expansion, international compliance, and black market crackdowns, form the building blocks of what some experts believe could lead to a revaluation. They argue that Iraq is setting the stage, cleaning house, and preparing for a stronger dinar. And if this momentum continues into 2025, the possibility of a significant shift becomes more than just speculation. It becomes a real option on the table. But here's the catch. Reform alone does not guarantee revaluation. It takes political will, regional stability, and careful coordination with global financial players. Iraq's reliance on oil revenues, ongoing political struggles, and dependency on the US dollar remain major hurdles. The question is, will Iraq be able to balance these challenges with its reform agenda? And if so, what would a revaluation actually look like for citizens, investors, and the world economy? Now that we've set the stage with Iraq's ongoing reforms, let's explore the deeper question. What would it actually take for the dinar to revalue? And why do some experts believe 2025 could be the turning point? First, let's be clear about what a revaluation is and what it isn't. A revaluation doesn't mean the central bank wakes up one morning and decides to make $1 equal to 1 dinar. It doesn't mean overnight riches or an instant return to the pre-1990 exchange rates. Instead, a revaluation is usually the result of long, difficult economic restructuring, where a currency that has been artificially weak begins to strengthen because of reforms, credibility, and market trust. In Iraq's case, that process starts with stability. Experts point out that Iraq's foreign currency reserves are higher today than at any point in the last decade. With oil prices remaining strong, the central bank has a financial cushion, a war chest of dollars, to back up the dinar if needed. This reserve strength is crucial because without it, no country can credibly support a stronger currency. The second ingredient is compliance with international banking standards. For years, one of Iraq's biggest problems has been the misuse of dollars. From smuggling across the border into Iran and Syria, to shady middlemen exploiting loopholes in dollar auctions, too much of Iraq's financial system has been seen as high risk by global regulators. But the recent reforms, tighter audits, digital transactions, and restrictions on suspicious transfers are slowly changing that picture. Experts say this compliance could eventually allow Iraq to reintegrate more fully with the global financial system, an essential step for any currency revaluation. Third, there is the matter of confidence. No revaluation can succeed if the population itself does not trust the currency. And here lies one of Iraq's biggest challenges. For decades, Iraqis have relied more on dollars than dinars for major purchases, savings, and trade. To rebuild trust, the central bank must do more than just issue decrees. It must create stability in the marketplace, narrow the gap between official and black market exchange rates, and ensure that prices for essentials like food and fuel do not spiral out of control. Only then will citizens begin to believe that the dinar can hold its value, and maybe even rise. But what exactly would a 2025 revaluation look like? Most experts caution that if it comes, it will likely be gradual. Instead of leaping to parity with the US dollar, Iraq could move in steps, strengthening the dinar slightly, perhaps by a few percentage points, then holding that line to test market reaction. If confidence grows, larger adjustments could follow. In this sense, the revaluation would be more of a journey than a sudden event, a process that unfolds over months or even years. Of course, risks remain. Iraq's political system is notoriously fragile. Corruption, infighting between Baghdad and the Kurdistan region, and tensions with neighboring countries all pose serious obstacles. If reforms stall, or if political crises erupt, the chance of revaluation shrinks dramatically. Some experts even warn that a premature attempt could backfire, triggering inflation, capital flight, and further reliance on the black market. So why 2025? Analysts point to several converging timelines. By then, many of the central bank's current reforms will have matured, digital payments will be more widespread, money supply will be tighter, and compliance measures will be more fully in place. At the same time, Iraq's political leadership faces growing pressure to deliver economic relief to a young, frustrated population. And with global energy markets shifting, Iraq's oil revenue may be peaking, creating urgency to diversify its economy and strengthen its currency before it's too late. For ordinary Iraqis, the stakes could not be higher. A stronger dinar would mean greater purchasing power, lower prices for imported goods, and more confidence in the local economy. For traders and investors, it could open the door to new opportunities, from real estate to stock markets. And for Iraq's reputation abroad, a successful revaluation would mark a powerful symbol that the country is not just an oil exporter, but a nation capable of financial sovereignty. But let us not mistake hope for certainty. The path to revaluation is narrow, and the risks of failure are real. The question isn't just whether Iraq can strengthen the dinar, but whether it has the discipline, the leadership, and the unity to stay the course. And so, ladies and gentlemen, as we look toward 2025, one thing is clear: Iraq's dinar is no longer just a currency. It is a test of reform, resilience, and national will. If the reforms hold, if confidence grows, and if political stability endures, then perhaps, just perhaps, a revaluation could be within reach. But if not, the dream of a stronger dinar will remain just that, a dream. Until then, the world will be watching. The markets will be watching. And most importantly, the Iraqi people will be watching, waiting to see whether their sacrifices today will finally pay off tomorrow.